Hey everyone, welcome back to Corporate Decoder. Today we are diving into the world of ENB Financial Corp, a community bank holding company. Let me tell you, their latest annual report is a real page turner if you're into deciphering financial jargon and risk assessments, but don't worry, we'll break it down for you, hopefully in a not too boring way. Think of it as banking for dummies, but with a touch of Wall Street intrigue. Alright, so the main point of this report is for ENB to say, hey investors, here's how we did this year and what we think could go wrong. It's a Form 10K, basically the corporate diary for the year. ENB Financial operates primarily through its Ephrata National Bank subsidiary. They're all about providing financial services to folks and small businesses, mainly in Lancaster County, Pennsylvania and nearby areas. Think local, not global. First off, a big disclaimer. The company says that a lot of what they are saying is management's current expectation that might change due to many factors, so don't hold them to anything. They literally wrote that they are not required to publicly update or revise forward-looking statements, so things might change. Now let's dive into what ENB actually does. They provide a range of services, checking accounts, savings, and various types of loans. They've even got an insurance agency. They are competing in this market against big national banks and smaller community credit unions. They say their key edge is quality service and convenient locations. One thing of note, ENB says they have 306 employees, most of them full-time and a few seasonal. It sounds like employee relations are good with no union involvement, small detail, but it matters in terms of stability and costs. Alright, now let's wade into supervision and regulation, something every bank has to deal with. They are heavily regulated by the OCC, the Federal Reserve, and the FDIC. All this basically makes sure ENB keeps enough capital, lends responsibly, and doesn't get too wild with risky investments. One thing to watch, FDIC insurance assessments. These are fees the bank pays to insure deposits. The FDIC can change these fees, and that impacts ENB's bottom line. It went up slightly for them to $930,000 in 2024 Koflina. They also got a satisfactory rating in their last Community-Wide Investment Act exam. This matters because this rating gets taken into account when the bank wants to expand to new locations. So not having a good rating could prevent expansion. Alright, buckle up, let's look at the risks. This is where they tell you what could go wrong, and there's a lot. Interest rate risk is a big one. If rates change unexpectedly, their profits could get squeezed. If they also have to worry about lending risk, basically, can their borrowers actually pay back their loans? If the economy tanks, loan defaults could spike, and that could be very bad. Mall Street are also worried about this one. Something to keep an eye on is capital requirements. The feds could force them to hold more capital, which would limit their ability to invest and grow. Lastly, cyber attacks are a never-ending threat for them and all financial institutions. While pretty standard, pulveries in the banking sector affecting their competitive position. All pretty standard, armed prickries in the banking sector affecting their competitive position. All pretty standard. Here's where things get interesting. Management goes over all the juicy numbers. For 2023-24, net income increased to $15.3 million, and earnings per share increased to $2.71. This was marked by an increase in interest income, but also increased expenses from the cost of funds. The company also states that they made a strategic shift to generate more fixed-rate mortgages in 2024. They highlight two key performance ratios. Shown on average assets at 0.75% and return on average equity at 12-13%. Basically, for every dollar of assets, they are making just under a penny, and for every dollar of shareholder equity, they are making about 12 cents. Net interest income is a big one for them. This is the difference between what they earn on loans and investments versus what they pay out on deposits. That difference increased up to $57 million. Good sign. The allowance for credit losses, basically their rainy day fund for bad loans, ticked upwards, mainly because they are growing the loan portfolio and also because non-accrual and classified loans increased. In simple terms, they are lending more, but some borrowers are showing signs of struggle. Let's talk about other income. There is an overall increase and it came from everywhere: trust services, commissions, and earnings on bank-owned life insurance. But expenses increased too. Their salaries and employee benefits are the biggest drivers. Most of this is due to raises and accruals for incentive payout, which increased $1,759,000 from the prior year. Switching gears to the balance sheet, the company discusses its liquidity and deposits. The loan portfolio increased from the prior year and core deposits increased as well. Then they talk about their investment securities. Management outlines how they shift their portfolio to take advantage of different economic conditions and make higher returns with those. The company says that on October 16, 2024, they approved a plan to repurchase shares of their own stock As of December 31, 2024, no shares have been purchased, but this may happen sometime this year. Next, they look at regulatory capital. The banks and corporations' capital ratios exceed the regulatory requirements to be considered well capitalized for total risk-based capital, Tier I risk-based capital, common equity Tier I capital, and Tier I leverage capital, and Tier B leverage capital. And the big picture here is that regulators want to make sure banks don't overextend themselves. And this bank is solid. The management of this company seems to know what they are doing. They have a asset liability management committee, ALCO, to check on liquidity risk, fair value risk, and interest rate risk. Finally, the bank says that all adverse events, war, acts of terror, bad weather, and instability could negatively affect their business. All in all, pretty standard stuff that most companies list. You have to prepare for the worst. One interesting detail from this report comes from their discussion of cybersecurity. ENB notes that it has developed and implemented an information security program, and that they conduct training on cybersecurity risks for the board of directors. Also, notably, there were no cybersecurity risks for the board of directors. Also, notably, there were no cybersecurity incidents that materially affected or are reasonably likely to materially affect the corporation. So what's the takeaway here? NB Financial seems like a well-managed community bank. The record earnings are great, but they have to balance growth with risk management, especially with interest rates being so unpredictable right now. Plus, that whole cybersecurity thing is always lurking. But overall, they seem to be doing a decent job navigating a tricky environment. Thanks for watching. If you enjoyed, please subscribe, like, and comment.